Thank you, Nadia. It's my privilege this afternoon to be moderating this session. We have a brilliant group of panelists. And thank you especially to Jonathan for joining us. It's so early in the morning in the UK right now. And it's glad that you are able to join us and then also to give such an inspiring presentation just now. So I'm going to give Jonathan a little break and I'm going to give the other panelists a little bit of an icebreaker introduction of themselves. So perhaps to start things off, if you can share a bit about yourself and your journey with integrated reporting and the developments in sustainability related disclosures. I will like to ask Chun to start first, and then Pauline, and then Siufan.
All right, thank you very much, Simon. And hello, everyone. So to start off with that ice-breaking question, my involvement with integrated reporting is tied closely to ACCA's involvement with integrated reporting, being one of the inaugural member of the IRC, part of the working group that put the framework together. In fact, I joined the working group late, replacing another colleague when all the hard work was done. I joined the last meeting because before it broke up. And then I was on the training advisory group as well. One of the things that I was most proud of, for a long time when you visit the IRC website, on the homepage, you will find an animation that explain integrated reporting in what I think is a very accessible manner. So I was part of the ACCA team that put that together. In fact, I wrote the storyboard, so very happy about it. In Malaysia, of course, as you know, Simon, I was one of the first group of people in the MIA Integrated Reporting Steering Committee when we require some steering at that time, more than 10 years ago. Until today, I'm still going around just telling anyone who cares to listen. I'm totally agreeing with Jonathan here that the IR framework is the best one, or architecture in Jonathan's word, in my view, to hang financial and sustainability related disclosures together. So it's been quite a journey. I'm feeling very privileged to be part of today's webinar to share some perspective and more importantly, to learn from my colleagues on the panel. So thank you for having me.
Thank you, Chun. Next is Pauline.
Thanks. I'm honored to be part of this esteemed panel. As Simon has indicated, I'm working with PwC Malaysia, and as a partner, I have basically supported some clients who are on the journey of implementing integrated reporting and also some sustainability disclosures. To be honest, I have been involved in this topic for a long time. I still remember the first time I came across this concept of value reporting. I was a manager in PwC UK in the year 2000, right? And of course, a lot of the concepts of value reporting in that particular document that I read were eventually morphed into part of the IR framework, and that's why I felt the affinity to it. And therefore, when the IR framework was actually launched in 2013, and MIA started the Integrated Reporting Steering Committee, I sort of volunteered to be part of the committee. Who knows that one day I will chair the committee. I'm glad that we have been part of the pioneers over the past decade in, building awareness in Malaysia on the, importance of having an IR framework, and not only from a corporate reporting perspective, but it's how it helps an organization improve their integration of thinking, integrated thinking across the board in the organization. So, happy to explore more about this topic and how it links to sustainability reporting later with the rest of the panel.
Yeah, thank you, Pauline. Right. Okay. Next is us to Siufan.
Hi. Thanks, Simon. Thanks. I'm actually very happy to be here. I think amongst the experts in the topic. So maybe a bit about myself. I started my career as PwC, being the thought leadership in stuff like this, right? Later on, moved on to be in CIMB and then be the practitioner side of things, right? So I've since been in the finance profession for about 20 years right now. Currently, so I'm the CFO for CIMB. I run the end-to-end finance function, so that spans across the operations, systems, regulatory reporting, capital balance sheet, performance management reporting, and planning and budgeting, so everything, right? Now, so there's this new thing called sustainability reporting, which is a big question mark, right, from finance point of view. But to be fair, CIMB started the journey of IR, integrated reporting, back in 2021. So we're not new to the game. Our research began maybe late 2019, 2020 to make that change. So we first published that integrated report back in 2021. So the journey for us since then was really reiterating, reinventing how we do this. A lot of it is a lot about breaking that silo on cross-functional units / divisions, because a lot of the information is very dispersed in a large organization like ours. So a lot of it is about breaking silos. A lot of it is about understanding how business operates in the today context. Without ESG, right? You think about the fact that, back in 2020, 2019, ESG was not a big thing, right? So having to learn how we operate, we need to then embed how then these new concepts that the thought leadership are now coming up with into our business operations / strategy / how do we measure it? Then how do we then encourage the culture to slowly shift? So fast forward 2024, there's the ISSB. Now enforcing it as a standard, for us, I think that journey was not such a leap of faith in our context. It was a little more adaptation and mapping and really strengthening what we've already had prior to that, and happy to share how it is. So for us, the journey is pretty straightforward from 2021 onwards, because we were party to the discussion. We were also the joint committee for a lot of the thought leadership discussion on how to then implement climate change in Malaysia. So we are forefronting that. But of course, for finance, our journey really only began back in 2022. So I guess I'll share more on that, on specific sections. I guess the panel will then address. So that's where we're at, and glad to be here.
Thank you, Sylvan. Okay, I will do the job of internalizing some of the questions that some of our participants may have, as when Jonathan presented, did his presentation. Some of the things that comes to mind is like, how do you link IFRS S1 and S2 with the integrated reporting? Second area that I'll touch on will be on implementing some practical implementation tips on IFRS S1 and S2. Then I'll touch on the role of the accountants, right? Those involved in finance function and CFOs in the value that you bring in the implementation of the standards. And also I would like to address the continued relevance of the integrated reporting framework. So I see that some questions are already are being created, being posted on the Pigeonhole. Please do keep them coming, and we will definitely try to address your questions as we go along. So the first question, the first point before I start is that I would like to also bring back some of the points that Jonathan alluded to just now, where there are 4 pillars of the TCFD architecture that have been incorporated into the IFRS S1 and S2, right? The 4 pillars are governance, strategy, risk management, and metrics and targets. These 4 areas. I would encourage you to check out the documents produced by the IFRS Foundation, comparing the TCFD disclosures with IFRS S2. So basically, if you have not applied TCFD disclosures, then you have to go into TCFD disclosures. Then, of course, IFRS S2 is TCFD disclosures plus. Then there are additional disclosures. Also look at the mapping between the IFRS Foundation framework and IFRS S1 and S2. And you'll find that a lot of the key disclosure items are already addressed more broadly in the context of value creation in the integrated reporting framework. So first off, I'll touch on the question of governance. So as we know, under governance of the integrated reporting framework, the integrated report should answer the question of how an organization's governance structure supports its ability to create value in the short, medium, and long term. Specifically, there are provisions to state that an integrated report should have particular actions, should provide insights on particular actions those charged with governance have taken to influence and monitor the strategic direction of the organization and its approach to risk management. So, Pauline, this first question will be to you. Since those charged in governance in an integrated report would have already addressed key consideration in terms of risk management, and to address sustainability risks and opportunities would be an area that, now they probably would need to focus more specifically. So how would an integrated reporter and also potential adopters approach the disclosures related to governance under IFRS S1 and S2? and what changes should be done in the governance processes and practices to enable a smooth transition into S1 and S2. Pauline, I start with you.
Okay, so maybe let me set the scene. I mean, why do we actually want to consider changes to governance processes, or why do we even report under TCFD or IFRS S1, S2 integrated report, right? There must be a business driver to this. So I put that to investor expectations. PwC had a global investor survey in 2023, where 75% of the investors actually consider how a company manages sustainability-related risk and opportunities as crucial in their decision-making. So if you don't have a governance structure that is robust in managing these risks and opportunities, then you are actually not meeting investor expectations, right? And of course, if you look further into IFRS S2, it also talks about governance disclosure should be tailored to specific needs and risks of each industry, right? So therefore, the governance structure should also address industry-specific sustainability challenges. So therefore, the board, and then thereafter, giving direction to the management team, needs to ensure that you have a structure that drives sustainability performance, because the board dictates a tone at the top, and then ensuring that there's good information flow with management. So some examples of enhancement to governance processes, I would say, that a company can consider include ensuring that as part of your business strategy of the company, the sustainability strategy is embedded within that. So the conversation is not two separate conversations, but it's overall one conversation about the entire corporate strategy, which includes the elements of sustainability. The board also must make a clear direction or representation on its responsibility to monitor, manage, and oversee the company's sustainability journey and performance, right? It can do so either through appointing a sustainability-focused committee, like what some companies are doing right now, or assigning a sustainability-related responsibility to an existing committee or to a person on the board, right? So that the person is really focused on it. And I've also heard questions around, does that person need to be a sustainability expert? And, my personal view is it's not really necessary, because you need to rely on many experts in order to look at many angles relating to sustainability. Then there should be some enhancement to policies, right? And also, what are the monitoring procedures in order for those enhanced policies relating to sustainability are adhered by employees, right? And then when all the system is set up, you will need to have the reporting process. So there should be approval process or a data collation control process to ensure that sustainability related information are compiled on a timely manner, in an accurate manner, so that it can be disclosed, right? And these are then, approved by the board after thorough review. Of course, in order for everyone to be aligned to the same objective, the management KPIs and the board KPIs should also include elements of sustainability-related KPIs, right? Last but not least, there should be a communication channel as well to ensure that the board is constantly updated on developments in this area. So there are many overlaps, as you can hear from what I've shared, right, in terms of what the integrated reporting framework talks about in terms of governance, and also what the sustainability standards are talking about in terms of governance. So I think it is a very good opportunity for companies to actually consider IFRS S1, S2 adoption as a business transformation tool. Don't think about it as a compliance exercise, so that you can integrate your sustainability, strategy to execution to reporting into your normal business strategy execution and reporting.
Okay.
Yeah, that's all I have, Simon.
Thank you, Pauline. Yeah, it's quite a number of points there. I especially like what you mentioned about integrating the sustainability strategy into the governance process, and also the matter of having sustainability related KPIs to drive the performance. And also as well, there is also the need to have the communication channel so that the boards is keep abreast of what are the key issues they face. Okay, thank you very much for that. I now move to yet another pillar that is mentioned by Jonathan just now, and I'm going to ask Jonathan himself. So this area of strategy, right? Strategy is so prominent in the IR framework, and it's quite interesting to see that, for example, in IR, just to share for those who are new to this framework, it is a guiding principle there's a guiding principle called strategic focus and future orientation. That's the first guiding principles. And then there is also the content element known as strategy and resource allocation. It is interesting to note that IFRS S2 also requires disclosure of more detailed information about where in the company's business model and value chain the risks and opportunities are concentrated. So business model is also a content element in the integrated reporting framework. So it seems that there are certain thoughts, concepts that are already there in the IR framework. So to move into IFRS S1 and S2, probably, what would you consider to be the advantages for an adopter of an IR integrated reporting to move into these disclosures? And then perhaps also to think about what are some of the good approaches and practices in addressing the pillar of strategy in the sustainability disclosure standards that we'll come across. Over to you, Jonathan.
Great. Thanks, Simon. So I think there are probably two big advantages of disclosing these issues in relation to strategy. And the first is around internal alignment and some of what Pauline has spoken about the value of integrated reporting and about integrated thinking, and really getting that internal alignment to help the business with its own resource allocation and in an efficient way, and also spotting risks through the value chain that could come back and hurt the future cash flows of the business, or its reputation, cost of capital, etc. So I think there is the internal alignment, the link to how the business itself allocates resources and how it manages its own risk for itself through the operation of its strategy. I then think that there is going a little bit deeper. I think, what we're talking about here with strategy, and it's really linked to the question of governance, is, what is the role here of, the finance professional, the company secretary, the sustainability team, the HR team, all parts of the business, so certainly all the ones that I've just mentioned, are absolutely fundamental to the strategy of the organization. And yet quite often you will find, if companies are operating in a silo mentality, that every department almost will have its own strategy or its own set of KPIs. And so I think really understanding the role of the company secretary, for example, and I just alight on the company secretary, in gathering information about where risk and opportunity lies within the business, and then taking that and making sure that it's on the board agenda, because ultimately the board is responsible for overseeing and determining the strategy of the organization. If these issues never find their way onto the board agenda, then they will never get resolved at the right level within the business. And one of the great advantages, I remember speaking to the Unilever CFO when he started using the integrated reporting framework, and he said, we're just spotting strategic risks and opportunities that we would never have seen within the business through the practice of integrated thinking, because I now have a direct line into the HR team, a direct line into the sustainability team. When they spot a key risk, it goes through the company secretary onto the agenda of the board. We spot it, we deal with it, we resolve it, and that's either taking an opportunity and running with it, or it's resolving and putting out a fire that otherwise would have turned into an inferno if the board hadn't been on top of it. So I think it's really understanding how the pieces of the jigsaw internally really fit together. And then I think it's also about better external communication as well. And this is where the integrated report actually comes in as a communication tool about a company strategy, because ultimately What we want this information for is to be used by investors to allocate capital more efficiently and more effectively. And what the evidence shows is that companies that are disclosing information about their strategic orientation, about their long-term strategy, they attract, frankly, a high quality of investor. They attract an investor that is with the business over the long term, over the business cycle, because they understand the business and they have confidence that the top management and the board understand the key risks that might affect their future strategy, and they're on top of them. And this is not about detailed plans that are fixed, into the future. There's that old kind of military saying of planning is everything. Plans are nothing, but planning is everything. It's that process that you go through as a business. We know we're operating in a dynamic environment, but it's that process of going through the planning, the thinking, and then being fleet of foot in the execution of that strategy. But that builds confidence of investors that are going to be with the company, not traders who are in and out of the company, leading to volatility in share prices and so on, but actually long-term investors who will be with the business, who trust the management. And all of this reporting, I think, is a proof point of the quality of the management and the quality of that integrated thinking within the business. And then just a couple of, we don't give the IFRS Foundation, unfortunately, kind of best practice examples, but I will just draw on 2 examples from our examples database at the moment that might be just useful for this particular guiding principle and content element. One is from Mitsubishi Heavy Industries in Japan, and what they've done in their integrated report on this issue of strategy and strategic orientation is they've taken their users through the transition from a siloed kind of business model to one that is much more integrated, and how they really, over the medium term, what they call the medium term financial plan, they're really using integrated thinking and integrated reporting to break down those silos and move to a much more integrated model for the whole business. And we find this with a lot of large businesses. They're complex and they want to improve the simplicity of the business. And then critically, they have tracked at the bottom of that kind of page the impact on the cash flows of the business. So in other words, this transformation is actually having an improvement, in terms of and is linked to improvements in the financial performance of the business. So they're not doing this just as a change management exercise for no reason. They're doing it because they know that it will improve the financial performance of the business, and they're measuring that and showing that in their report. And then the second one would be CBUS, which is one of the superannuation funds in Australia. And what they have is a whole kind of scorecard essentially for their strategy. So they set out their strategic goal, they measure that, and then they have a traffic light system. Have we met that strategic objective or have we not? So it's the strategic goal, an absolute performance measure, the result of that over time, and then a scorecard. Have we actually met that? And then obviously they include mitigations and so on. But it's really clear on one page what their strategy is, how they're measuring that strategic goal, and then their performance against that. And I think that's just another way of highlighting how companies are using integrated reporting as a means of communicating the strategic focus. Thanks, Simon.
Thank you, Jonathan. I like the point that you mentioned about breaking the silos and then spotting strategic risks and escalating them to the board at the right time. And also looking at its overall better communication, external communication. All right. Okay. Now to Chun. I know Chun is very passionate about integrated thinking. ICCA came out with some publications on integrated thinking. So it's heartening to see that for me personally, that the IFRS S1 has connected information as one of its conceptual foundations. And as we know, a connectivity of information is a hallmark of integrated reporting, which is underpinned by integrated thinking. So there are now 4 paragraphs in IFRS S1 on connected information and 4 paragraphs in the application guidance section, which have the same authority as other parts of the standard. So in total, there are 10 paragraphs on connected information. So Chun, please share with us regarding the importance of connected information and how integrated thinking is an important enabler in driving connectivity of information. And perhaps also to share with us what are the benefits of having an integrated approach to thinking, decision-making, execution, and reporting.
Thank you very
Chun.
much, Simon. And I was just also picking at the pigeonhole question. I think the
Yeah.
quoted question probably will be addressing at least part of that as well.
Yes.
So I'll be building on what I guess Pauline and Jonathan has already said. First of all, I think it is well recognized, right, that integrated reporting is not an end in itself, right? The bigger prize has always been integrated thinking. And I was just telling Jonathan a couple of weeks ago that the most beautiful analogy that I've heard about integrated thinking is from Prof. Mervyn King, the first chairman of the IRC, who drew parallel between integrated thinking and conducting an orchestra, right? So the different departments in the company, they are like the different sections in the orchestra. You have the string, you have the wood, you have the percussion. They may all be really, really good individually as sections, but when you try to put them together without a conductor, you may end up, coming out like a mess rather than a beautiful piece of music, because they don't know how loud, how soft they need to be, how fast, how slow they need to be, right? So you really need the conductor, the integrated thinking, to get all the sections to play in harmony, to align everyone towards a shared goal. So I think it's a little bit like what Siu Fen said, large organization, you have a lot of silos. So she was sharing that for CIMB. One of the key first steps is just breaking down those silos, right? So just bringing everyone together. And perhaps it's easier to appreciate it by clarifying what integrated thinking is not, right? And there are many things that it's not, but I'll just raise a couple of things. First of all, it's not, for example, reporting your climate risk in your sustainability report, right? While making investment and operating decisions that assume business as usual, that takes no regard whatsoever of the fiscal risk and transition risk that you talk about in the sustainability report, right? So that is not integrated thinking. It's also not chasing quarterly results by slashing R&D, by cutting employee development, training, because that is trying to boost the financial capital using an IR term, financial capital in the short term, but without regards to the impact that your decision has on intellectual and human capital, and indeed financial performance in the medium, longer term. So it's really about making decisions and taking actions, not through a tunnel vision where you're just isolating one problem, tackling it without thinking hard about everything that's connected to it. So in the conference that I think many of us were in Tokyo a few weeks ago, I heard someone shared a Boston Consulting Group recent study, which found that increasingly, and that's looking at the last 4 years compared to the decade before, companies' profitability is affected by factors that cannot be explained by company, industry, and country level variables. So these are externalities. These are like geopolitical factors, climate, technology factors that are beyond the direct control of management. And the study found that actually 43%, which is almost 10% more than before, of the profitability were unexplained and attributable to this kind of externality. And I'm sure many of us in the audience today listening to this webinar, we are experiencing the same in the recent past, right? I have a friend who is on the board, and he shared that recently the board was trying to secure private equity funding. And then the market turmoil resulting from the tariff drama just happened. And the potential investor is now having two minds because the market is going on a roller coaster. There are more exciting, higher potential returns that they can now pump their money into. So they have to be really agile, right, to be reacting to all these different changes. So the turbulent global economic time that Jonathan just mentioned in his presentation. So you need to be agile, you need to be innovative, and the ability to see very clearly how you pull one string that will actually have a whole chain reaction and impact all your resources that you use and affect. So this ability is more critical than ever before. It's about surviving in the now and also building resilience for the long term. And I'm going to quote Prof. King again. He said before, integrated thinking is a strategic tool that helps management bring order to a manifestly complex environment. I think we are in that manifestly complex environment, and integrated thinking is not just helpful, it is essential. So just to wrap up, it's really about good thinking. It's about making better decisions, understanding how your business interact with the world around it. So if we call it integrated and it helps more business pay attention to it, great, but it is not a management consulting lingo. I have nothing against management consultant, but really the best businesses have always been doing it, whether they had a name for it or not. So back to you, Simon.
Thank you, Chun. Yeah, it's interesting that you shared some examples of what integrated thinking is not, and so further elaborate on some of the examples on that, and of course the matter of dealing with breaking down of silos. Yeah. Hey, so we would like to now engage Siu Fen. Of course, you play a significant role in leading sustainability related disclosure efforts in CIMB. Well done. For accountants, the accountants in the room, right? So CIMB has gone on its own integrated reporting journey for years. And what was particularly noteworthy in your view concerning CIMB's own IR journey? And how has the bank forayed into TCFD disclosures? You have done that, recently, and then strategized its approach now into adopting IFRS S1 and S2, right? Which is also TCFD plus.
Thanks
Stephen?
for that question. Okay, I think I'm going to answer your question differently, right? I think integrated reporting is, at the end of the day, reporting, right? CIMB, from the start, we believed in the impact of what some of the sustainable way of doing things mean, right? That to us is a huge opportunity to make changes. I think the first beginning part is what is the strategy and why do we need to exist? That decision has been made and we're very clear from the start. So integrated reporting is just a forum and a set of standards to help us put that together, right? So we're very clear from a business strategy standpoint, we want to create impact and make changes. Therefore, from a business point of view, we believe that sustainable way of doing things, either to the economy, to the society, to environment, will be something that's important to us in the long run. So that strategic view has been very clear to us, right? So in that piece, we're very clear in the strategy. So we built a very top down in terms of the efforts that we want to try to build a business around it. So in that whole thinking about that positioning that we're taking, there will be risk and opportunities which lies with trying to build something like that, a business around that. So integrated reporting was helpful, right? So we became a supporter in the TCFD forums. We were also leading it together with BNM and SC back in 2021 to try to do some application guidance for Malaysia in terms of the TCFD. So we were at the beginning with the thought leadership team in terms of how should we look at reporting some of these things, right? That's how we see it. So of course, during that journey, there are a lot of iterations, of course, with the panel of thought leadership members, there were a lot of discussions that was useful for us to shape how that business model will eventuate, right? So the reporting to us is just a byproduct of the business strategy and the pivot that we're taking as part of the organization, and hopefully the impact that we create in the region that we operate in. So that's one. So we participated, I think, in the joint committee back in 2021, BNM and SC, to kind of shape that for Malaysia. And of course, being in that forum, we were quite clear on how we want to apply some of these guidance at the onset. So that was easy from the point of principles that were being developed, because those principles will be aligned with people who will use our report, right? So we recognize the different stakeholders that will be interested in this. Investors will be the main focus, but there are a lot of other stakeholders like activists, ESG activists, who will be interested. in this region as to what are we doing in this part of the world. And we also believe that our stakeholders span beyond that, and to, of course, our rakyat, right, our citizens in the region that we operate in will also be interested in the kind of impact that we're making as an organization. So investors will be the first stakeholder, but the broader stakeholders will be also interested. So putting this together, we are moving away from that whole annual report being just really financial statement focused, which is the traditional way of looking at things. So a lot of impact is being created with some of the ESG focused initiatives that we believe is very important as a nation, not just as CMB, as a nation that we need to deal. So a lot of these disclosures were crafted and from a principal perspective, discussed together with the regulators. For us, applying that, of course, operational challenges will be there. Right? Despite the fact that we come together, we agree on certain principles, the operational challenges on really getting the data was not easy, because these are not your typical financial data that we already are collecting. These are a lot of data that's new. So we are in the space of coming up with new data points that is needed to make this reporting happen or make it useful. So a lot of the data was something that we needed to collect for the first time. Right? So the data was one thing, and then putting something together to create awareness of where we're at was another thing, right? So integrated reporting frameworks, right? The guiding principles behind that really help us shape how we should think about this, right? From a reporting standpoint. I think the reports just really show us where we're at, right? Numbers don't lie, data does not lie. And then for the largest stakeholders, where I think the disclosure requirements were around the governance, provides the transparency of the users of the report in terms of where we are, right? What are the governing committees looking at it? How is management looking at it? Do we have KPIs around this, and how we are making things work? So a lot of the reporting things that we do is a function of the business decision we make at the onset and the strategic pivot that we're making, right? So we see that this integrated reporting is just complementary to a decision made by the organization. So for us, it's really because we're very clear on the sustainable way of doing things, we are really clear on that. The reporting is a must-do for us, right, at the beginning. And the earlier we get started on this journey, the better we can baseline ourselves, and we can, I guess, refine and improve as we go with time. So for us, it's been a couple of years now that we've been doing this. So we can see ourselves refining a lot of the data points that we're collecting. And we also see ourselves collecting more and more data to make it a lot more meaningful, right? So for us, it's really getting together with the industry or the players in the country to really shape how the reporting should look, right? But of course, then came the TCFD guidance, right? In terms of what needs to be reported or what should be reported as a guiding principle. But I guess when you make it a standard, it becomes a lot more mandatory to a certain extent, right? So when it becomes mandatory for I guess businesses who has not made any decision on being sustainable in any case, would now need to report something that they would then read and realize whether is it time for me to make that decision, right? So that's where we see the first point of making that decision to move into integrated reporting is that first, and then reporting is just by the way, right? So that's how we see. And of course, for us, the journey was not easy at the beginning, but I think the transition to S2 was a lot easier with TCFD for us, right? So we've already published that first voluntary mapping of how we are already in compliance with S2 in our latest report in 2024, and we just continue to iterate until the standard becomes effective in Malaysia.
Thank you, Susan. So you mentioned about looking at your strategy, the reason for being, to start that with first, and actually that is really very much integrated thinking. And then when you come in with a report, it's just more of reporting. But and then towards the end, I appreciate the comment that when you did also the integrated report, you also thought about the information that you need to present, and that also does affect how you actually navigate in the organization. So yeah, so those are some of the points. And then you mentioned about on the operational side, the importance of getting the right data, right? Getting the data points. And as you move into the journey of your reporting, you are refining those data points, right? So those are all, I thought very good takeaways from that. With Chun, perhaps you can give me the angle from with with the sustainable IFRS S1 and S2 with the sustainable disclosures, coming, being now the area of focus. And of course, it's going to be something that is going to be in ASEAN and also beyond. As you see the chart that Jonathan shared with us, how can finance and accounting professionals contribute meaningfully to improving the quality and disclosures, or consistency of these disclosures?
Thank you, Simon. And I think we have a live example here in Chiew, right? So as the CFO leading the effort of a large bank. And every time someone asks that question, I remember Mark Carney, who we know is the 24th Prime Minister of Canada. But he was already kind of popular as a familiar figure in the sustainability field as the UN Special Envoy for Climate Action and Finance. So he spoke at a joint IFAC ACCA webinar a few years ago, and he said in his speech, the accounting profession is absolutely essential to the fight against climate change. And I'm sure I'm preaching to the converted here, but I think the profession is really best placed to act as a bridge between sustainability outcomes and financial consequences. The profession is trained and skillful in scenario analysis, stress testing, risk modeling, and those are critical inputs to strategic decision. And more to your point, Simon, the profession brings ethics, integrity, rigor, and discipline, right, to the capturing of information, establishing internal controls around that, and of course the communication, the reporting part of things. So I think to me it's a very clear-cut answer. And just point out one more thing, which Jonathan has mentioned, a few people mentioned as well, assurance. Right, I think that's definitely one very critical part of that ecosystem to ensure quality, consistency, and credibility of the information. And while I know that there are many different players in this field in assurance, and as IAASB standard, it is profession agnostic. But I do feel personally that professional accountants are uniquely placed to play that role in a robust manner because of the training and the experience that we have. So I'll just stop here.
Thank you, Chun. Yeah, definitely appreciate what you mentioned on the ethics dimension and also the dimension of the assurance side of it, right? Now, Chiew, you're a glowing example of a professional accountant championing sustainability in your organization. So what advice would you give to fellow finance professionals who aspire to play in this role, and also perhaps not only to support, but also drive sustainability initiatives and also preparing high quality, transparent sustainability disclosures that are aligned with international standards such as S1 and S2?
Thanks, Simon. I think that's a very pertinent question, especially for young accountants coming to the field. I think I've never seen any profession evolve as much as a finance professional, right? I think we started ourselves as bookkeeper and then performance management and now sustainability reporting, which is a completely different field of study. I think I agree with Chun Wee. The finance positioning of the finance officer in this place exudes integrity, exudes the excellence on governance, exudes the understanding of importance of assurance, and all that. Therefore, I think it gives investor confidence that if it's championed by a finance professional, it ticks all these boxes in terms of the integrity and the appropriateness of the reporting, right? So I agree with that. So that's a good front, right? If you run an organization and you've investors looking at investing into your company where you're creating impact sustainably, they would want to be assured that there's a standard that we upkeep and uphold in terms of the reporting. And in terms of driving ASEAN adoption and IFRS, I guess as a group accounting function, we also drive consistency with group reporting. And therefore, I'm applying S1, S2 for my organization, and I will lead that change for CIMB, right? So that's for sure, right? So it goes without saying. So group policies, I think finance officers are very well versed in consistency. So therefore, we will also drive that consistency to ensure that a single set of reporting is published for that matter. So I can't see how finance does not get involved. In any case, the scenario generation on the financial impact of some of the things that we do, so the both risk and opportunities, right? So the bad and the good has a quantitative impact to profitability, right? And that reconciliation more so important to the financial statements, as a lot of these things have not been quantified. It's not been quantified yet. So the finance officer now needs to plug themselves in, learn this skill at a very accelerated pace, and keep abreast of what's happening, right? Because economic changes, social changes, and social perspective of things will impact how we do business. And I guess if you want to be a CFO or now we say Chief Value Officer, right? So how do we create value without understanding what's happening in the landscape? So we need to get ourselves up to speed. So I'd say that, you know, this creates an exposure to finance professionals beyond just accounting, to something a lot more, relevant. And I guess sustainability in this case creates a lot of relevance to individuals, right? It's not just reporting financial statements where it's probably relevant to the investors or to potential investors, but a lot of these sustainability reports, if you see the GRI indexes, etc., is relevant to us as individuals, right? So we need to make sure we push this through. So I'm fully supportive, and I can go on and on talking about how this will be an additional credential for the finance professional. So the question is whether universities, before you qualify as somebody as a Bachelor of Accounting, that sustainability becomes a core subject. So that's the point to think about, right? Thanks.
Thank you. Thank you for all those points. Okay, now I want to move on to Pauline to ask about the continued relevance of integrated reporting. Perhaps only I can only ask you and Jonathan because there's a limitation of time, and then after that we'll need to do a wrap up. So for Pauline, Malaysia, as you know, we have gained a lot of traction in the adoption of integrated reporting, and the Malaysian Institute of Accountants have been pivotal in the advocacy of IR for over a decade in Malaysia. Perhaps you can share with us, as the chair of IR, the Integrated Reporting Committee, how PAOs, regulators, and also those other key stakeholders can promote the adoption of integrated reporting in the region, and also please highlight some palpable benefits that you have experienced in, have you seen in successful adopters, and how integrated reporting can help the boards and senior management discharge their fiduciary duties better, and also overall produce better overall reporting, both in the private and public sector, not forgetting the public sector too. Okay. A lot of questions.
Yeah, Simon, that's such a long question for such a short period of time. So maybe I'll
Okay,
just
3 minutes
start.
for you.
No,
Right.
maybe let's talk about MIA's journey, right? So as a professional accounting body, how has it has journeyed in order to help promote the relevance of integrated reporting. If I go back to the building awareness part, it is really engaging the entire ecosystem, and it's not only about talking to the professionals, in this case being the accountants. It is really engaging the regulators from Securities Commission, from the Stock Exchange. I'm just reflecting back on all the conversations that we have with companies, with the central bank, of course engaging IRC at that point in time, and then IFRS Foundation. We engage the board of directors, all the CFOs, and also companies that we showcase, right? Because we engage with the regulators, and how Malaysia a decade ago wanted to take a market-led approach, it was necessary for some of the leading companies to actually put out their hand and volunteer for voluntary adoption, so that we can showcase what benefits are attributed to companies that has gone through that journey, right? So having this kind of engagement across the entire ecosystem, speaking to the investors, bringing in investors to talk about what is important to them when they view or read financial statements or annual reports, right? And how the integrated reporting framework actually helps address some of their questions was very useful from a Malaysia perspective. Then, of course, engaging with also the community at large, right? So those leading companies who then become early adopters, they engage with their various stakeholders to see whether they have met the objectives of transparent reporting with those stakeholders, so that they will know that it is an effort worth going through, as opposed to it being just a nice to do. Then another area that was an area of focus was on education and training, right? Obviously, it was very important. So, if build awareness, we know what our framework is, but how do we go about doing it, right? And that is a very normal question that we have. Even now, when we are having this webinar, we're talking about S1, S2, you know, it is a lot of questions around then how do we start, right? So therefore, we actually leverage a lot of people, thought leaders in this area to really educate you know, organizations that are going through this process, you know, having certifications or consultants who can help you know, organizations go through this journey. This help really build the capacity and understanding. And the understanding needs to go throughout the entire organization, starting with the board of directors, right? Otherwise, if you don't get the buy-in or tone from the top, we have seen many organizations, you know, not being able to go through the journey because if the board of directors think that this is only for reporting purposes and not see the value in integrated reporting. Collaboration and partnership is another area that is very important, working with different organizations to promote, you know, the use of integrated reporting or transparent sustainability reporting. Last but not least, we always find that having incentives and recognition is very important in driving any agenda, right? So, for example, MIA actually had a couple of years ago once a recognition of companies who actually went about adopting IR. And slowly, you know, the framework on the principles have been embedded within our National Accounting Annual Corporate Report Awards, NACRA, right? So that, you know, companies are aware that, you know, if they actually improve on their corporate reporting using the IR principles and, you know, incorporating sustainability reporting within it as well, they will be recognized as a leader in their sector or overall. So all these various approaches, I think, will definitely help, you know, in terms of driving adoption. So in terms of some of the benefits that I've seen, you know, internally, we've talked about breaking silos and so on, but externally, actually stakeholder communication becomes much easier. Because, you know, if you think about the annual report and how you present, you know, all the way from your strategy, your governance, you know, your risks and opportunities, what is the performance that targets that you have and what's the actual performance for the period, the framework is really there. So all you have to do is using the same framework and focus on different areas when you're communicating with different stakeholders. So the communication channels and the directness of the communication to your various stakeholders actually improves as a result of this. And, you know, one of the early adopters actually did comment on that, where they engaged the various stakeholders after they have produced the first or second round of integrated report. The feedback was very good in terms of having a consistent discussion around the goal. So, you know, in your first briefing, you talk about these are my 3 or 4 year goals, and then consistently over the period of time, you are actually still referring to the same strategy that you have and how you are moving towards that. Another benefit that I've heard from the public sector perspective, Simon, you did ask, was by insurance regulator in Malaysia, right? Because sometimes when you are a regulator trying to talk about value, you don't look at it from the perspective of the bottom line, right? It's very hard to say that it is a bottom line driven organization. So what is the value? Is the value is around, you know, how you actually, you know, have risk management to ensure that you're protecting those stakeholders, you know, in this case, the insurance regulator, how you're protecting the insured parties by having this regulation on the insurance industry. What is the environmental impact that you have as an organization, right? How are you building capacity, right? So that you will have insurance providers who understand, right? Actuarial valuation, how you measure risk, how do you disclose risk, and how do you mitigate risk, for instance. So these are some examples where there are benefits to individual entities. I'm sure there are a lot out there, and that's why we try to feature them in our various publications in MIA, right? We call on to companies to talk about their journey and what benefits, so that you will hear it from the preparers rather than those people who are preaching that you should adopt, you know, a particular standard. I hope that answers your various questions, Simon.
Thank you, Pauline. Yeah, and MIA, we not only advocate the integrated reporting, but we also walk the talk. We produce 8 integrated reports. Okay, now over to Jonathan. Just before we wrap up this panel session, you have been an advocate of integrated reporting for more than a decade, and you've gone through a tremendous journey. And with this heightened focus of sustainability disclosures, in this era that we are in now, what would you consider to be, maybe the highlights, or just share some highlights on some pertinent experience that you have, where the heightened demand for sustainability initiatives and disclosures, how it has been incorporated into the organization's value creation strategy and performance in integrated reporting that is of most valuable to you. Yeah, thank you.
Great. Thanks, Simon, and I'll be very brief. I think the first thing that I would say, the first big change, is that I think if we were having this webinar 10 years ago, the word non-financial would have been said quite a lot. We were dealing with non-financial information and financial information. Whereas now, I think within businesses and between businesses and their stakeholders, there's a recognition that sustainability risk, climate risk, these are financial issues. What has changed over the last 10 years is the disclosure horizon, the horizon over which we're thinking about these risks and opportunities. And the more you think about the long term, you extend from the short to the medium to the long term, the more the issues that are relevant to climate, to sustainability, human capital, bees, etc., these are going to have an effect on the financial performance of the business over the long term. So we've ended that nomenclature, that language of non-financial has essentially, evaporated, because we see that these are issues that are strategic. They are essential to the performance of business over the long term. And climate risk is business risk. Sustainability risk is business risk. It's core to how businesses are run today. And it's core to investor expectations and stakeholder expectations of business. You look at the next generation of employees, suppliers, customers, they all want to know how a business is adapting to this environment. And the race for talent, as I said in my presentation earlier, is going to put this at the critical heart of the ability of business to attract the next generation of highly talented employees. The only other point that I would make, Simon, because I know we're stressed for time here, is that I have seen loads of examples, individual examples over the last 10 years of companies getting a real market benefit from adopting integrated reporting. In Malaysia, there was a business just a few years ago, I won't name the business, but there was a business a few years ago that told us that they had received an offer from a Japanese bank for a loan at a lower rate of interest. Cited by the bank was that they were doing integrated reporting because it gave the bank greater insight into the business model and a greater trust that the management and the leadership of that organization was on top of its key risks and opportunities. So the interest rate on the loan fell as a consequence. The final example would be just from Goldfields, a mining company in South Africa. When they did their materiality determination process, they found that the number one material issue for that business was health and safety in the mines. They then completely reordered their KPIs. So from the board right the way through to the mining managers, health and safety was the number one KPI. That KPI, with all the measurement and performance and incentives, cascaded right the way through the business. You had one set of KPIs that cascaded right through the business. That is what integrated thinking and integrated reporting is about. It's having that clear line of sight between what are the risks that are going to affect your business and how your workforce is incentivized, motivated, managed, how its performance is managed, and how you then disclose all of that to your investors. And yes, that's information that's also relevant to other stakeholders. Goldfields is a great example of how they took that and put it into practice. So that's another example. Thanks, Simon.
Thank you, Jonathan. Okay, now is the last round for each of our panelists. We'll start with Chiew and then with Chun, Pauline, and then last but not least, Jonathan. Maybe any key, what's in your mind or you would like to share with the participants as your parting word?
Yeah, so
Chiew, first Chiew and then Chun, and then Pauline and Jonathan.
So I think just leave everyone with a bit of a hindsight sharing on where we started. I think with integrated reporting, it really helped shape the organization and how we should look at our strategy, right? And I think for me personally, I think the most impactful takeaway that I could get as a personal, on a personal basis, is really the how it's really relevant to me, right, as an individual. That was important, both as a person and also as a finance individual, right? So I think the way to do it is, as with any reporting function, there will be the pain of transitioning, right? So I think the pain is something that we need to work through, but it starts with taking that strategic pivot. I think that is to me, if anything, the most critical part. If we already took that leap of faith, reporting is something that we need to do because it enables the company to also monitor its progress as well as managing stakeholders. So that's my two cents of the topic. Thanks, Simon.
Thank you, Siu Fen. Okay, Chun.
Thanks, Simon. So I hope by now everyone is confident that you're not alone. There are a lot of support, a lot of guidance out there. Those that Jonathan mentioned, ISSB, IFRS Foundation, MIA. Just want to layer on ACCA, we have this one-stop shop, Sustainability Reporting Hub. If you don't know how to get started, it offers a great 8-stage framework for you to just work through. So I just want to signpost that to everyone. The second and last point I want to raise is the talent implication. When the global talent trend from ACCA come out next month, you will see that one of the key highlights from that study, and Simon, you had a preview of that, is that professional accountants and accountants to be, they are very, very enthusiastic about roles that focus on environmental issue, right? And I think when you look at ASEAN, the interest is even greater than the global average. So Indonesia, Myanmar, Vietnam, Malaysia, for example. So I wanted to put that as my parting thoughts. For you personally, seize the opportunity. For the leaders in the room, know that this is an important talent retention and attraction leverage. So this is really a great time to be in the profession. So I just want to leave with that word. Thanks, Simon.
Thank you, Chun. Pauline?
Yeah, Chun took the words out of my mouth. Actually, I wanted to say there's no better time than to be an accountant than now. Because, I remember having the conversation around Gen AI will replace all the accountants in the room. I don't believe that to be the case, right? Because, you have heard from the panel today how important the finance function is, right? Moving forward, we do need to upskill, reskill, and, be agile, right, to move forward. But there is so much opportunity for the accountants and the finance function as a whole. The second point is the time to start is now. If you have started, well done, continue the journey. We are all in this together, and there's a lot of resources available out there. Reach out to learn from each other, because, if you don't start today, you are already late, right? So, do feel the momentum to move forward, and then engage all those around you who are in the same journey. Jonathan, over to you.
All right.
Thank you.
Okay, Jonathan.
And just building on that, we clearly need efficiency or more efficiency in reporting. We need to constantly demonstrate the value of our corporate reporting. And I hope that we've been able to show the business case for integrated reporting and integrated thinking today. The integrated report can be a good location for S1 and S2 disclosures, together with the financial statement disclosures. And this must be driven by integrated thinking. And MIA members, AFA members are at the forefront of helping businesses to drive this change. But like Chun said, like Simon and Pauline and Siu Fen have said, we are here, not only our panelists, but the IFRS Foundation globally here to support and engage at whatever time and in whatever forum. And we have the resources and we have the time to engage with the market. So please do, if you're struggling or want further information or support, don't hesitate to be in touch. Thank you.
Thank you, Jonathan. Ladies and gentlemen, let's give our panelists a big hand, a virtual hand, possible. All right. Okay. Thank you very much.